Hello there, Mavericks. This is Rob Reinhold. It is the last week of May. We've got the Memorial Day holiday coming up, but let's get into next day's shortened week. All right, we're going to go through what happened this week. A pretty flat week, but we did have a lot of good stories to talk about. The question is, did anything change in the technicals? We'll take a look at that. And of course, we've got bullish, bearish, and sideways setups. I got 6 setups for you this week.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's get ready for the week.
All right, let's go into some of the stories here. Last week we consolidated at all-time highs. So in the end of the week, we didn't really go anywhere on the S&P. We had one market up, one market down. We'll get into that. But I really want to point out, and I'm going to be showing you this and talking about this, the large caps were bullish. Everything else was actually quite soft. And if you took away the large caps, this was a decent down week. And you're going to see that in the sectors. There were some sectors that were down 2 and 3% on the week. We had the dollar and bonds up. The 10-year bond is up to 4.5%. That's okay for the market, but it really can't go much more above 4.6, 4.7 before that starts to cut into the bullishness. The gold market pulled back pretty hard from record highs, and this really came about on Wednesday when the Fed came out and released their minutes and said they're really worried about inflation and they think they're going to have to keep interest rates higher for longer. That definitely did not help the interest rate picture. Let's go through some of the important economic reports last week. And really, there wasn't a whole lot. The one I really want to point out here is this flash services manufacturing. This gave the market some pause. This came out slightly stronger than expected. And look at the flash services PMI. The services PMI killed it, and this is when the bonds started to move higher and the market really didn't do well. This was the big down day we had on Thursday, but then take a look at Friday. Durable goods orders higher than expected. It's still showing the economy is doing quite well and that the Fed isn't going to be cutting rates, but they also aren't going to be raising rates anytime soon. So the question is, did any of that change our market analysis? Let's go ahead and jump into the numbers and jump into the charts. The Dow was down big. So the Dow broke a 5-week winning streak, down 2.3%. As you can see, the S&P was basically flat for the week. The Qs were up 1.7% or 1.37%. That's a big week. So we've got Dow was negative 2.5%. But then take a look at the Russell. The Russell was down 1.2%. The only thing that was really strong were those large cap tech stocks. Oil got hit, gold got hit. Underneath the surface, it actually looked like a much weaker week than the headline numbers show. If we take a look at the charts, let's take a look at the S&P first. I want to just point out we had consolidated for about 2.5 months, and then we broke out. So we broke out of this kind of high base that we had here, or maybe it was a longer term bull pullback. It doesn't matter. This is the important thing. Look at Thursday's candle. It held 5260. I pointed that point out last week. I said, look, 5260, we could pull all the way back down to 5260. And if we hold that, it's perfectly fine. As you can see, we held it. And then Friday's candle, a gap up and buying after it. So there was no secondary sell-off from Thursday's weekday. That's telling me that this market wants to hold these recent gains. If we come over and take a look at the NASDAQ, you can see that the NASDAQ, look, it didn't even really go down much. Yes, Thursday we had that big gap up and fall, but when you take a look at it, it was just marching solidly up for the week, showing you that technology, especially large cap tech, the NASDAQ 100, is extremely strong. This is the chart I really wanted to show you this week. Take a look at this. And we've got these big, bold greens. We got NVIDIA up 15%. Look at all of the semiconductors, Microsoft, Meta, Eli Lilly. And then take a look at everything else. You can see that there is more red here than green. showing us that this week was actually more of a down week than an up week. Even though the headlines are going to tell you it was a flat week, NASDAQ up week, this really was more of a down week across the board. So let's talk about this week, go through what I expect this week in this week's events. I wrote last week it's flat out bullish. However, we are seeing a little bit of weakness underneath the surface, and we have more downgrades in sectors than upgrades this week. This week, I'm kind of expecting a boring week. We do have the equity markets close on Monday. The equity markets and bond markets are closed for Memorial Day. So we have 4 trading days, and we're going into these summer months where these people are looking to go on vacation. Traders are leaving Wall Street. So I don't expect this week to really have all that much activity. I think this is going to be a fairly boring week when it closes on Friday. And we don't really have a lot of economic news except for one decent sized report on Friday, and that's going to be the core PCE price index. I've seen forecasts at 0.2. I've also seen forecasts at 0.3. Look, if it comes in at 0.3, I think it's going to be just fine because that's 3% a year. Everyone's okay with that. Everyone knows that's where the market is. If it comes out higher than that, then yes, we will see bonds start to creep up, and I think we'll see a little bit of selling. The market has been looking through strong inflation reports for the last 3 months. I don't see any reason why this time it's going to freak out and cause a panic. Yeah, it'll probably be a down day. It may be a down couple days into the next week. But this economy is still really strong, and I don't think the Fed is even close to announcing they're going to be raising interest rates. If this number comes in at 0.2, this market is going to have a party. And I talked about this last week when I talked about market sentiment, the mood of the market. When you're in a good mood and bad things happen, you brush it off. Someone cuts you off in traffic, you brush it off. You're in a grumpy mood and things aren't going your way, someone cuts you off in traffic, you overreact and you lose it. That's how the market works. Right now, the market is in a good mood. So I see that this number is hot. I see it not really doing much to the market. If this number comes in as expected at 0.2, the party's on. Party is on. As you can see, I'm still leaning much more to the bullish side as far as market sentiment goes. We took a look at the chart. We are still at a +3. We are above the 20, above the 50. The 20-50 slope is moving higher. Okay, we're at a +3. So what do I think is going to happen this week? I think this week is pretty flat. I think we're going to continue to chop around these levels. I think we could easily trade up to 53.40 at the top and trade down to 52.60 at the bottom. I see us just going sideways here for these 4 days this week. After that, I think the market is setting up for another leg higher, ultimately being bullish. Let's take a look at the sectors, and we're going to score them all from +3 to -3. If we take a look at the performance, this is what I'm talking about. The headline news says the market was flat for the week. Take a look at this chart. It was not flat. Now, yes, the S&P was flat. The NASDAQ was up, 1.4%. But take a look at what actually happened across the board. Financials down 2%, energy down 4%, real estate down 3.5%. This was not a bullish week. And as I said, we got more downgrades from sectors than upgrades. Let's take a look at the sectors one by one and give them a score. Utilities was a +3 last week. We had a little pullback, but hey, you know what? That's just fine. And in fact, whenever you have a +3 and you get a pullback or a base, it's just telling you it's gathering up for the next leg higher. So for me, utilities is a +3. Communication services last week was a +2. We got the 20 crossing above the 50, so we're going to go to a +3 on this one. So again, strengthening, and look at where it closed on Friday. It closed at the highs of the week on Friday. That's very, very impressive that it recovered all of Thursday's loss and almost put in a new high. Going into real estate. Real estate had an ugly, ugly week, going from a +2 to a -1. And you can see, look at Friday's candle. The rest of the market had green candles. This one did not. Friday was a down day. I expect we're going to see some continued weakness in the real estate sector. Healthcare. Healthcare was a +2. Okay, we had 2 days of a pullback. I don't love that Friday's candle was a red candle, meaning we probably still have a little bit of selling left to go in this sector, but we're above the 20, we're above the 50. It maintains its +2. Coming over here to industrials. Industrials was a +2, and it's going to get a downgrade. As you can see, it has come all the way down to the moving averages. It had a tepid bounce. Look, this isn't the best candle I've ever seen. But remember, we just took a look at 2 sectors that had big fat red candles that closed on the lows. This is a decent candle. We're going to just downgrade this to a +1. Financials were also a +2. These get a downgrade to a +1. I'm much more encouraged by Friday's candle in financials than industrials. So +1 on financials. Next to consumer. Consumer was at a 0. It was the weakest sector last week, and you can see that it weakened significantly, -2 on consumer discretionary. We can definitely be looking to take more shorts in this sector. Technology. Technology ignored all the selling. Yes, Thursday's candle was a nasty candle, but Friday erased half of it, telling us that we can now look again to be long in technology. Materials. Okay, materials was at like a +1, +2. We pulled back, +1. Okay, it's just hanging out there, neither bullish nor bearish too much on materials, slightly leaning to the bull side. That's it. And energy. Energy was a 0 last week. It was at a +1 and 5 down days. Think about that. 5 down days on a week where we had some up days and down days. Every day this thing went down. Friday's candle, ugly candle, closed closer to the lows than the highs. Definitely a -2 here on the energy sector. So if we take a look at the movements here, the biggest hits were to energy, consumer, and real estate. So they've dropped all the way down to a -2. These 3 sectors look very, very shortable. We got upgrades from tech and comm services. So tech and comm services got stronger. The divergence between the two, again, we really are trying to point that out this week, that there was one group that was so strong that it masked a lot of the weakness in the market. And then we got some mild downgrades in materials, industrials, and financials to a +1. Our strongest sectors are comm services, tech, and utilities. That does not happen very often. When tech and utilities are both at +3s, this is actually fairly rare. We've got real estate, energy, consumer as the weakest sectors, and then in the middle we got materials, industrials, financials, and healthcare. So last week we had some trades roll off. So this is what we are left with at the end of the week, and you can see we are leaning to the bull side like we should be leaning to the bull side, but now we have some empty slots to fill. So this week, we're going to fill some of these slots. We're going to be adding 1 to utilities and 1 to comm services. We're going to be adding a short in the real estate sector, but just a -1, because look, we have already got our -2 filled. We're going to fill that with an energy play. And then we've got a sideways trade we're entering in industrials and a slightly bullish trade in financials. We decided to go that way because financials had a better bounce off the bottom than industrials. So we had openings in both of these sectors. We need to fill them. So we said, hey, let's fill the industrials with a 0 and financials with a +1. So let's start off and take a look at some of those potential trades in those sectors.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
First up is utilities. Utilities have been strong and stayed strong. This is a very strong stock. Next Era Energy, NEE. And you can see we have made a big run. We made a big run, and now we're putting in a base. This base is likely to last a week, maybe a week and a half more. Typically, we see this 20-period moving average starts to put some pressure on it. Once that 20-day moving average starts to hit those candles, it tends to push it to the upside. What can we do here? High bases are great for plus ones. They're just fantastic for plus one trades. So you could take a look at a diagonal call spread, 74, 77 diagonal call spread. That's going to be, again, June 21st, and then sell this Friday 77, which is right about at the money. So what you're saying is we don't think it's going to go up a lot this week. If we're looking to put on a plus two trade, then you want to go out a little bit further in time and say, look, the 76, 78, that is a very reasonable trade to ask this thing to be above 78 within the next 2 weeks. We don't know when this high base is going to break out. We actually don't even know if it is going to break out, but asking it to go above 78 is definitely not that big of a stretch. So the 76, 78 bull call spread. Real estate was a sector that took a big hit this week, and we want to take a look at a potential short. This is Weyerhaeuser, WY, and you can see low base. Low basing, low basing. Remember, 2 weeks ago, we had real estate at a plus two. This thing couldn't even get above the top of its low base. So telling you it is weaker than the sector and weaker than the market. Here we are tickling the bottom of this range. How do we want to play it? Well, it depends on how bearish you want to get. Remember, we're looking at a -1 trade. So at a -1 trade, we're looking at the 31.30 bear put spread. If you want to be a little bit more bearish, just go down one more strike to the 31.29. But take a look. You are not asking this thing to go down much. If you do the 30.31, you're basically saying we want it to be below 30. If it's above 31, we'll take a max loss, but we think it's going to be somewhere down in here by the end of the expiration period. Next up, comm services got upgraded from a +2 to a +3. So again, we want to add some bullishness onto this. This is Fox News, Fox Corporation. As you could see, we came up, hit this high, we pulled back. We had 4, 5, 6 days of a pullback. We put in this really nice solid base here. And as I pointed out, when that 20-day moving average starts to hit up against these bottom candles, it tends to push it out. Look at the day it had today. Hardly got hit on Thursday. Actually, still had a green candle on Thursday, and then a gap up and a run to close on highs on Friday. This thing looks really good. All right, let's talk about target. All right, target on this one, if you're willing to go out till probably the June expiration, I think we're looking at a 35, 36 target, 36 probably being the closer number. But remember, you don't have to be that aggressive. Based on what you're looking for in your trade, you can say, I think it's going to go to 36, but you know what? I'm not looking to be that aggressive in this slot. So a +1 trade would be a diagonal call spread of June 21st, 32, May 31st, 34. That's basically right out of the money. This thing just has to just hang out where it is, go up a little bit more, and that's going to be a nice max gain trade. We're looking to do a +2 trade because that's what we allocated in our slot. So this is going to be the June 7th, 33.35. So 33.35, we're asking this thing to get up to that 35 by June 7th. If you do want to be even more aggressive than that, June 32 calls will give you a lot of positive delta on this one. We decided to allocate a 0 to the industrials. So we're looking for a sideways play. This is Honeywell. I talked about this one on either Wednesday or Thursday, saying, look, this 200 looks like a great area to put a butterfly on. And you can see it kind of wants to hang out here in this area. So 190 at the bottom, 207 at the top. I think that 200 is the right place to be. Big question is, how do you want to play it? If you want to be shorter term, then you're going to want to look at the 1 week trade, the 195, 200, 205. That's basically saying this is the range and it needs to probably stay in this area for a gain on this. If you're willing to go out a little bit further, the 190, 200, 210 butterfly. And again, this is your profit area, probably somewhere in here. As long as it stays in that area, it's going to be a profitable trade. We decided to add a little bit of bullishness to financials because it had a little bit better candle on Friday. I also talked about this one on Thursday. This is Coinbase, and I talked about the bull flag pattern. When you get this big run up, you get a big run up, and then you get this lazy downtrend. And you can see it's a downtrend, but it is very, very shallow. It's not a deep one. And once it breaks up above its upper trend line, it is a very good buy. I like cryptos here. Cryptos have done a really good job of holding in while things are weak, and they're approaching all-time highs here. They're only a couple percent away. If we make new all-time highs in crypto, this stock should do very, very well. The question is, how do you want to play it? If you want to be a plus one, okay, the 235, 240. That's a really wimpy trade. Hopefully you can see how wimpy that is. 235 to 240. We're talking about that much. You need it to go up above 240. That's very wimpy. But look, if that's what your strategy calls for, is a plus one, great. The June 7th, 235, 245, a little bit more aggressive. But again, you can see not even crazy. If this thing goes, it's going to go up to 255, 260, 270, maybe even break out to new highs above 280. If you think that is the case, then I think this is the spread you want to go to 240, 255. That's going to give you a 3-to-1 risk-reward ratio and pay off very, very nicely. I do like this setup. It's a good-looking setup, and if cryptos keep going, this stock should be a nice winner to the upside. And last, energy. Energy, we're going to add our most bearish trade, our -2. This is Phillips 66. There's lots of good bearish setups in this sector. Here we are, low base, came down, made a bounce, we're hanging out. And again, right in here, we've got even more consolidation. If we can break down below that, I think we got 140 as the next level of support. If it breaks that, then it's going to go much, much lower. If you want to play this less aggressively, take a look at the June 7th, 144, 141 bear put spread. We're looking to do a -2 trade, so that's going to give us the 143, 140, basically saying, hey, this is the range. We think it's going to at least stay in this range, if not go below that range. Breaking below that 140 would give us max gain on this trade. Those are the 6 trades I have for you this week. If you have other trades you want to share with the rest of the group, you know where to go. Log into the Maverick Trading members area. Go to the forum. Let's get that chatter going. Love to see our traders working together to try to make everyone more profitable. Let's wrap this up. Large cap market is bullish. You take a look under the hood. You know, that Russell 2000, boy, every day it looked really, really lousy. And the days it gapped up, it was the first market to fade away. And a lot of the markets stayed positive and the Russell went negative. There is this general malaise underneath the surface. So I want everyone to understand that. I talked to a couple traders this week that said, Rob, my bullish trades aren't really working out. And I kind of had to say, look, if you look under the surface, there is more weakness than strength. I know it's very frustrating to look at the headline numbers, but take a look at the sectors. The sectors tell the story, and there is way more weakness than strength across the board in sectors. Overall, though, understand, this market is still bullish. And whenever we get pullbacks in these bullish markets, they typically get bought up and go higher. So yes, I understand it's frustrating when your bullish trades underperform during a situation like this, but as long as you have enough duration, then those trades should come back nicely. If you don't have enough duration, that's why we position size for max loss. That's why we take that loss. We'll have to move on and add on a new trade with longer duration. At some point, this market is likely to go higher, and it's going to be very profitable for your bullish ones. Thank you so much. Everyone have a very, very good and safe Memorial Day weekend, and we'll see you next week. Goodbye, everybody.